All right, let's move on so I can get a flight.
Yep, another commodity
Brennan,
business. Let's.
you've
I'll just
got
share my
Verde
screen here.
AgriTech. Now, this is a company that we have interviewed in the past a couple of times. There's been a bump up in the share price of late, although it's been very volatile. This company, lack of profitability over the long term, and a lack of company hitting their guidance.
Yep.
And I'm just going to be frank with this. We've interviewed management, and it didn't screen well in terms of just the plan for the business.
Okay, so Verde AgriTech NPK on the TSX currently trading at a price of about $1.72 and about a $90 million market cap. So they are an agricultural company which produces and sells fertilizer in Brazil and internationally. Now, we've covered Verde a few times on the podcast. The first was as a dog back in April of 2023, following a decline of over 50% in 3 trading days after management cut guidance. The second time was in September of 2023 as a year stock take when it traded in the $2 range. And the last time was in the spring of 2024 when it traded at about 90 cents. But each time the business didn't screen very well, and we believed that it was more speculative in nature. However, the stock is recently up over 270% in 1 month. So let's dig into the business here, see how the fundamentals are looking today, and see what is driving the stock higher. Now, just going over the business a bit here so you can understand it. Verde's potash reserve is 5.9 billion tons of potash as approved by the Brazilian Mining Agency. They are currently permitted to mine 2.8 million tons per year, and they have manufacturing capacity through its Plant 1 and Plant 2 for a combined 3 million tons per year. Verde is also looking to expand this further with a new mine pit pending permit approval, as well as an additional plant number 3, which could provide additional production capacity of up to 10 million tons per year. Looking at their Q2 2025 results, the company's tons sold were down to 80,000 with total revenue of just 4.8 million, which is down 26% year over year. EBITDA was a loss of 182,000 compared to essentially break even in Q2 of 2024. And net profit was also a loss of 2.4 million, which was slightly better than last year. And looking at tons sold, it continues to be depressed in the levels or from levels in 2022, with the price of potassium chloride also remaining depressed from the elevated levels in fiscal year 2022 and fiscal year 2023, sitting at about USD $352 per metric ton. So it is up a bit year over year at this point, but at this level, with its current tonnage being sold each quarter, I believe they will continue to produce losses throughout this year and into next unless something drastic changes. The balance sheet also remains in a net debt position of 43.1 million with negative trailing 12-month EBITDA. So the balance sheet doesn't look great, in my opinion. And the valuations also at this point right now remain extremely elevated given the lack of earnings and cash flow, with a trailing price to cash flow multiple of over 130 times. Now, the company didn't provide fiscal year 2025 guidance, or at least I couldn't find any in their MD&A and press releases. But looking at their fiscal year 2024 and fiscal year 2023 guidance, they missed it substantially. As you can see here in 2023, they were looking to sell 800,000 to 1.2 million tons, but only sold about 428,000 tons. And then in 2024, they guided towards 700,000 to 800,000 tons, but only sold 319,000 tons. So it doesn't surprise me that management isn't providing guidance, given they missed it by such a wide margin over the last few years. It's also worth noting that after the boom in fertilizer prices experienced in 2022 to 2023, many farmers in Brazil experienced significant difficulties from elevated fertilizer prices, reduced grain prices, elevated interest rates, and now tariffs. In fact, a survey conducted by RGF and Associates indicated that in Q2 of 2025, 388 agribusiness firms were under court-supervised restructuring in Brazil, which represents a 60% increase from the same period last year. And of every 1,000 agribusiness firms operating in Brazil, 11.5 are in bankruptcy protection. This is the highest rate of any industry in the country. And to put it into perspective, the manufacturing industry is at about 6 per every 1,000. However, despite the grim potash market, what's driving the stock recently is the company's recently announced Man of War ionic absorption clay rare earths project, which currently has a scoping study underway with a timeline to complete initial drilling and provide assay results in Q4 of 2025, and to potentially release a preliminary economic assessment in mid 2026. So this has been driving the stock up on this, kind of enthusiasm recently. But to conclude here, Verde has really been, a struggling business. They've been struggling financially and, recently unable to produce positive EBITDA. Guidance was missed in both 2023 and 2024, and they didn't provide guidance in 2025. The agriculture market is currently depressed in Brazil, so the outlook for potash sales in the country may continue to look grim over the next 1 to 2 years. The balance sheet remains levered and negative, and has a negative 12 trailing month EBITDA. Plus, they're now spending money to prove up its rare earth project, which is not a great look in my opinion. The stock has performed well as of recent due to excitement around its new rare earths discovery project. But in my opinion, I believe it is highly opportunistic by management to be looking toward developing rare earths, as their main potash business looks very grim, almost as if management is trying to go after a bit of the flavor of the day in the market. So right now, I would say it's highly speculative. We continue to monitor the business. Maybe they're able to prove a substantial mineral resource and preliminary economic assessment for rare earths. But again, it's just highly, highly speculative. And given management's track record of execution, I would be very cautious with this company at this time. And there is the disclosure.
I think you hit it on the end, the track record of over-promising and under-delivering. And it wasn't just misses. Those were massive misses in terms of production. And production is something you can more control than revenues in a business like that. And they weren't close. So, you get it. We do check marks. You get an X from us when you significantly miss estimates in terms of production. And now they seem to be moving from this, the business that has, and the ag side that has failed, to rare earths, which are, a flavor or topic du jour. And to us, it looks like, if I had some advice for the company, raise money right now. That's what you should do. Your share price is relative to the underlying fundamentals of the business right now looks overvalued. If you can get people to give you capital, do it right now. I wouldn't be giving capital at this stage, because there's companies we can find that have that upside with far lower prices. There's a company, small cap, in that segment that is actually making money that we're looking closely at right now, and has a far better balance sheet. That's net cash position. That's what we prefer to invest in versus something that is now flipping to another business potentially. Keeping that core business, but it's core losing money, and then if you had a core business that was making money and then we're, okay, well, let's capitalize on this discovery, fine. Core business has not been managed well, has not hit targets. That's what we can say. And now they're into another business, and, there's a huge, long process to go from that small, the discovery to where you could actually have cash flow. And there's a lot of pitfalls on the way to that. And they haven't managed the existing business well in terms of getting it to actual sustainable cash flow. So
if like the potash business, like you already said, if the potash business was cash flowing and they were able to fund this exploration through cash flow, it would be, it's kind of like an optionality. It's interesting, or more interesting to me. But this just screams high risk, and I wouldn't touch it with a 10-foot pole.
Yeah, and even further than just
tell us what you think, Brennan.
Company's execution. So just to even further lay on the risk, you have to just take into consideration really U.S.-China relationships. Even though it is a Brazilian company, what's been driving all this rare earth from mines to the production of magnets? It's the U.S.-China relationship. China cutting off the U.S. to At this time, they're cutting them off. Sometimes, some days they aren't. Some days they seem like they are, and it's that volatility. And then the multiple years it would take to actually get production up running, things will likely change for better or worse in whatever your prerogative is. But things are going to change, and that's that risk layered on top. Even if management were to somehow execute perfectly, Ryan and Brennan already went over why there's a decent chance they won't. But even if they do perfectly, it could still go against you just because of the nature of the environment. And we're seeing more and more of these really hyped stories around rare earth metals. And if you do have massive production come online, because right now there's no US led production, it's all Chinese, especially on the processing side. Do we start to see a glut in 5-10 years? That'll be my next question. Do we actually see overproduction? Because you do see these duplicated scenarios. You have full mine to magnets in China. Do we start to see that in the US, Europe? And do we get an overall global glut? That can also, just gonna throw that out there as well. I don't know if you guys have any more thoughts.
And many of these rare earths aren't as actually hard to find as, say, gold is today or anything like that. So you could get into oversupply. And when we see hyped markets, I mean, it is different, but for example, cannabis in Canada, massively oversupplied, a ton of capital floated in, a ton of capital may float into this. And then you get your, oh, yes, we had a great mine and we even brought it to production, but now there's an oversupply. Oh, that's hit. It's commodity-based business is very, very difficult. Not saying you can't make money investing in them, but very difficult. And in this case, all we can judge this company on, this management team, is their past track record, and they're continually missing their own estimates. Those are their own estimates, not estimates from the market, estimates from analysts. These are their own estimates, and that's all we can judge them on. And if they hit them, we'd be very happy. They're not hitting them. So, that's what we can judge them on, not executing on their own target.